Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Hump Day. It's Wednesday, June 5th. Hope you're having a great day so far. We got a few economic news to go over today. We'll start off with the ADP employment, which kind of starts us off for the week in terms of the jobs numbers we're going to see. Now, as you can see here, we had a really good April at 271,000 new jobs created in the private sector here. However, in May, it really disappointed. It came in at 27,000. We'll touch base on that, how it's affecting the markets in a bit, but we'll kind of follow along here. We got the market services PMI for the month of May, and as you can see, it remained the same at 50.9. 50 on these two indexes basically represent anything of optimism or expansion, and 50 or above. Anything below that becomes expansion. So as you can see here, on market services is kind of on the verge there. We're actually at 50, on the 50 now, whereas ISM non-manufacturing index, which is also the service industry, we had in April 55.5, forecast calling for a slight increase to 55.9. However, it jumped up even further than that, about to 56.9. So a little mixed in the terms of services. So overall, but we're seeing services looking pretty good. Later today, around 11:15 Pacific Standard Time, the Fed Beige Book will be released. This will kind of give us the microeconomics in the different regions of around the Fed regions. So we'll get stuff more concrete as to what's out there, more microeconomics of what we'll see in the different regions. So let's see how this is faring in the headline news. The stock market is up. So even though we had a disappointing ADP number, there's a lot of economists are kind of thinking we'll still have a decent BLS number. They're kind of projecting around 190,000 new jobs created. So the reason behind that is primarily because initial jobless claims have been relatively low. We've been in the low 200s for most of the month, and so they're kind of thinking, well, it'll probably be a decent number there. It doesn't always correlate. So from ADP and the BLS numbers. So again, they think we'll still have a decent number on the BLS numbers. Now the other stuff are pretty much what we've heard before. That what's really kind of driving the market. ADP, obviously, they're kind of shrugging that off because it doesn't weigh as much, but they do kind of keep their one eye on it. Again, because it doesn't always correlate. But they were kind of going off the comments. Which is kind of really what's dictating by the Fed members here. We had Bullard on Monday made comments that that they might be lowering the it gave indications. I don't remember word for word, but gave indications that the Fed may lower rates sooner than later. And then Powell kind of almost reiterated in the sense that he thinks that feels that the tariffs are weighing on the economy and that the Fed will take appropriate action. Which could lead to a rate cut to keep the economy moving along, since the tariffs could be pulling back or slowing down the economy. And of course, we had stuff going on with China. We had, they're talking about restricting the U.S. from rare minerals from our electronics. There was comments by some U.S. that we could potentially start mining our own rare minerals to offset that. There's also the G20 meeting coming up this weekend where Chinese officials will be there as well as U.S. officials will be there. There could be some meeting there that may be able to hash out some of the tensions that arose from the previous talks. So again, things are kind of moving along. So they're feeling a little bit more optimistic today. So the stock market has been taking off, as well as kind of continuing with the sentiment from yesterday here. So let's see how this is playing out in the bond market. The bond market right now is at 0. We were down yesterday, but today we're kind of where we're kind of about where we left off yesterday. So there's really no change from where we left off yesterday. However, it did kind of continue. So even from after we did this video yesterday, it continued to drop a little bit. So some lenders may be, depending on when they came out with the pricing, they may come in with a little lower prices. So I would say it's either unchanged for some lenders, or it might be price for a little bit worse for other lenders. So depending on when the lenders came out with their pricing, it's possible that some lenders might come out with worse pricing and others might be about the same as where we left off yesterday. All right, so and here's the 10 years. So we're down slightly, down to 211 now versus 212 where we were yesterday. again, that's about where we are. So again, rates are either depending on the lender, so they're either unchanged from yesterday or they're maybe slightly worse than yesterday's. All right, you guys have a great rest of your day. Thanks so much for watching, and we'll catch you guys tomorrow. Bye bye.